Usual disclaimer. Westgold, for those of you who don't know, was born out of the demerger of Metals X, which was a base metal company, tin operations, nickel operations, and a copper operation, and we demerged in 2016. Westgold listed then, and we've built up 4 mining process plants, 12 million ounces of resources, 3 million ounces of reserves to become 6th largest producer of gold in Australia currently, at sort of 275,000 ounces last year, building over the next year or two to steady state to 350,000 ounces. And we'll just run through that, all the projects now. So shares on issue, 360 million. We've got share price currently about $1.30, market cap 470 with 50 million cash. We've got no debt, enterprise value of 420 million. Strong management team led by Peter Cook and Peter Newton, long-time industry stalwarts there. Peter Cook's been successful at places like Hill 50 and Wafu, Hidden Valley. And we've got a strong shareholder base, loyal shareholder base that's been with us for a long time, and some big names there in terms of BlackRock, Ruffer, and we've got the VanEck, GDXJ in there as well. Not that they're a great deal of help. As I said, a small amount of hedging and a small gold prepay in there. So we've got 4 mining centres currently, all that obviously were some purchased in Metals X, incubated, developed, and all brought online. Refurbishments of all plants, all bought sort of out of distressed environments during the downturn. And we'll go sort of from east to west, and we'll start with the Fortman gold project. Sorry, just before that, this has been our growth over the last 3 years. This year we're forecasting 300 to 320,000 ounces, and then once we get to one of our bigger operations coming online, end of 19 into 20, we're looking at sort of 350,000 ounces plus. Cost-wise, still higher costs at the moment, whilst we're obviously spending that capex and building up the ounces there. And then when we get to our steady state, we look to be at sort of 1250, potentially a little bit lower there with a few other things that have happened recently. So the first one, Fortnum, we bought this off RNI about 18 months ago. The plant was basically on care and maintenance, refurbished it, brought it online with some low-grade stock. We're into an underground there, which is Starlight. That's north of Meekatharra. And that's a 1 million tonne per annum plant, 60 to 75,000 ounces per annum. As I say, plant refurbished for 20 million, pre-production costs of 30 there. First full year we did 41,000 ounces there at all in 1387. Now in our second full year of operation, we expect to hit that 60 to 70,000 ounce for circa 5 to 7 years going forward. And with some exploration upside there, potential with Horseshoe Lights and fairly historic gold mining centres around that region. And this is just a run through of the Starlight underground here, which we've started on now, so it's good grade. I better not spend too long on here. I'll move on to the next one. The Murchison region is our biggest aggregation play that we've done. We purchased, obviously, originally off what was Westgold, and then brought it into Metals X, and then demerged it out again. The operations which we had at Big Bell, and then we further obviously bought operations which is Big Bell down further, the Tuckabianna plant, which we'll get to. So in the northern region, we can just have a fly through here of the actual area that covers all the way, basically running from Meekatharra all the way down to south of Kew, with some fairly famous mines in there. We've got 2 operating centres, 2 plants there, as I say, and with some fairly big endowments of gold there and some big resources. Plant there, Bluebird Plant in the north. That's obviously the resources that we've got there, so circa 8 million ounces in resource there. So there's plenty of gold to be mined over the next 10 years. We've actually put out in December of last year a full 10-year life of mine plan, which outlines sequencing, costings, production going forward for the next 10 years. So this whole area here in the Murchison's got currently a minimum 10-year mine life going forward and production of 250,000 ounce out of it. So Meekatharra gold operations and Kew gold operations. As I say, 1.6 to 1.8 million tonne per annum plant, producing 120 to 140,000 ounces per annum. We produced 112,000 ounces last year. We lost some time there with a big rain event that happened early on in sort of February. We got a year's worth of rain in the period of about a year and a half. So we sort of lost about 8,000 ounces there to that. Otherwise, we would have made our target. And this comprises the Bluebird Plant, Paddy's Mine being the main bulk feedstock for this mine, and then we've got other underground operations and open pits coming into that as well, running down into Nanine and the Reedy's Trend. As I say, the 10-year development plan, there's what we've done there. We've got 5 underground mines progressively being developed, Paddy's, which is operational, Jack Ryan's operational now. The South Emu underground's just started, and Boomerang and Bluebird plan to come online over the next 12 to 18 months, with feeds from open pit as well to supplement the underground feed. And then this is obviously just a fly-through of the Paddy's Flat Mine. So 600,000 tonne per annum, as I said, that's the main base feed for it at 4 grams plus per tonne, with some very rich thrusts in there as well that obviously goes into the workings. And we're getting down to development there where we're obviously starting to hit some more high-grade zones, so that should be a very strong performer going forward now for us over the next 3 to 4 years. I'm just mindful of time, so I'll just run through these just a little bit quicker. This is obviously the Triton South Emu mine that we're obviously going underground as well. Again, this provides us with some strong feed going forward. We've developed this over the last 12 months, and we've got some more good ore coming out of that, as I say, starting over the next sort of 6-12 months. Next operation is the QGOD operations, which is where we've spent a lot of our time in the last 18 months to 2 years developing. We originally had Big Bell there. We bought the Comet mine and the Tuckabianna plant off Silver Lake sort of 12 months ago. Again, refurbished that plant. We've now got that in operation, had its first quarter just recently, producing 12,000 ounces. And going forward for this financial year, we expect we'll do about 75,000 ounces and then keep building that up to sort of above 100 to 120,000 ounces going forward. That's when basically we're going to have Big Bell coming up to steady state, this is what the main game is in this big development phase for Westgold now. This is the Big Bell mine. It's produced a lot of ounces. We've developed down, dewatered, refurbished down to the red bit there, and then obviously we put down twin declines there, and we developed 4 levels of ore going forward. And that comes in at about a 6,000 ounce OVM when we're mining that. So it's a fantastic endowment. I call it the Samantha Fox Mine. That's just a little joke for someone out there in the audience. And so we've spent thus far about $80 million on development already, which is a massive dewatering project, refurbishment. We're now down on the new ore, and we expect to get a little bit of ore early on at the end of the year, but then the full development won't come through till end of 19. But once we hit that mark, as I say, this area will be sort of producing another 100,000 for plus 10 years, and there's plenty of areas open for that. The other sort of cream on top, as it's been called, is Great Fingal and Golden Crown, which are very famous old mines in the region. I'm sure there's a lot of people in the room that will know about that. We've started to just mine a little bit of open pit ore out of Great Fingal. But once the Big Bell development's finished, we'll actually go down to these areas in Great Fingal, especially there where, this is mined 1.2 million ounces at 19.5 grams per tonne. This was shut in 2014 and hasn't been mined since, but it finished on ore. We've done some drilling down there to confirm that the ore's still there. So again, once we're sort of in a free cash flow mode, we'll spend some development capital there, and I think we'll get some fantastic ounces coming through there to supplement Big Bell going forward. Then we've got Higginsville, which is one of the first assets we bought when we went into gold when we were in Metals X, which we bought off Alassa. It's been a great mine, a great operation. It was underground, which is again at another mine called Trident, which we've subsequently closed now. It was getting fairly deep and there was some seismicity issues. And we purchased off Panoramic, Mount Henry and Selene. So we've switched it from high-grade underground to low-grade bulk mining. and that's sort of running through at sort of 50 to 65,000 ounces per annum at the moment. We purchased a little bit of a higher grade asset off Cirrus Polar Bear, and that sort of will start to feed into the operations going forward. So that's the 4 operations there. We do have some other, I'll just quickly, I haven't got long to go. We've got some other assets that are non-core. We've got a project up in Northern Territory called Rover, and it was a virgin discovery. It's an IOCG deposit, sort of 1.2 million ounce equivalent, and it's also got some fairly exciting lead zinc discoveries on that as well. That just sits there in the background there. We're not developing it. It's not our sort of core focus, but it's again, it's an asset that we think's worth some fairly good money. We've got some lithium royalties from our sale of the South Cal operations to Northern Star earlier on in the year. Again, those royalties start paying. It has a head value of about $70 million, but you know, these can be divested and obviously bring some further cash flow into the company in the near future. To finish with, anyone that follows Westgold, you know, we had a bit of a speed bump sort of mid last year, midway through the year, where our contractor got into some fiscal issues, and it was decided that we would purchase that company as to sort of not distract from our mining operations. Otherwise, we would have lost quite a bit of revenue and time on our operations going forward. We purchased it. It had been fairly run down. We needed to spend some extra money than what we originally thought on obviously getting the maintenance schedule back on track, purchasing some more equipment so that we could make it something that's worthwhile for us and obviously can cover all our development operations. We've done that now. We spent a little bit more money, as I say, than what we originally thought, but I think that will benefit in lowering our costs going forward. And you know, we've got a stated cost structure there of about sort of $1,250, but there's every chance that we can lower that number, you know, having our own obviously contracting segment there. Not that we want to be mining contractors at all. So, you know, once this is finished and the development of Big Bell's finished, we will potentially look to divest it as an ongoing contractor. And with an order book, you know, circa in the region of $250 to $300 million, it's quite a valuable asset. So that's something that shareholders can potentially enjoy, you know, in a year or so's time. Just having a look at some peer comparatives here. We're looking at sort of what our mineral reserve and resource is. We're by far one of the cheaper companies out there, with obviously 12 million ounces of resource and 3 million ounces of reserve going forward. There's other metrics that you can use. I think our production going forward in 1920 versus our market cap is also a substantial discount to our peers going forward. And there's just the release of our statement there, obviously, with our reserves and resources going forward. And disclaimer there, and time's pretty much up. But thank you for your time.